Hi, this is Elliot Wave Sage. I want to go ahead and do a market update. Like always, and this is financial advice. Always do what's best for you. So this market is starting to top out. It can still continue to grind higher. When we look at where we are right now, we're starting to try to invalidate the triangle. I believe, with this close here, you could start to see that invalidation of the triangle. It doesn't mean anything other than we need to expect potentially another bounce after this pullback come in. So I do want to show you this alternative count, which is starting to look more and more like the primary count, given where the dollar is. But the triangle you can't negate it just quite yet, but it's getting close to being negated. So what would this turn into if it's not a triangle? Well, what are we looking at here? Well, I think for the most part, what I would do is I would probably label this still just like I have it here as A, and then you would come up in B here, right, in a three-wave move. And then here you can see you have down here, if you count down, is 5. So the best way to probably label that is something like this. Again, this is looking like the label. This is the only other alternative I can think of, and we're going to go back to this, and then you'll get that. And so the question is, where we are in this X wave? Well, as you know, we need 3 waves up, right? So let's take a look here, and then there's your peak, there's your bottom. So right here, it looks like you would have like a W, an X, and now we're in some kind of Y wave higher. And how high can it go? It depends. It depends on a lot of factors. But as you know, with Y, it's in a 3-wave move that I believe the first section of the Y wave is coming to an end. So look at this W. You see how it had a pretty big pullback here. We're going to see a similar pullback at any moment. So we're probably here in A. You come back, fill this gap at B, and then finish in C. So this is probably now starting to look like the more likely path. So what does that mean? Well, when we get B, you may want to buy long positions. And play that C wave bounce. But you don't. But it doesn't have to. But B is coming, so short entries are still an ideal buy right now because we still should get this pullback in B soon. And again, the triangle is close to negated but hasn't. So if we're still in the triangle, it will unravel. It won't stop. So if we look here in A, more than likely some kind of 1, 2. If you look 1, 2, 3, 4, and then this is probably 3, 4, 5, something like that. So we're probably in the last move higher here, and then one more high should do it, I'm thinking, and that may come in tomorrow's session. So that would get us to 416 and 418 for the end of A in the short opportunity, down to probably 400, 396 in a 3-wave decline. It takes a little bit of time, similar degree and complexity here. So this was December 12th. It didn't end it on the 22nd, 10 days. So if it starts here on the 17th or 18th, probably by the end of the month, we should be down here. And then C should get C, and then that should be it. And the question is, how high can C go? What would be the right count? So could go from this point of view here. So if you do it that way, you can go all the way up to 450. See, pretty substantial, right? Pretty substantial pump. And I don't think we'll go that high. I just personally, I think, but technically you have to be prepared for that. The other alternative is we make it to about 430. So you can say the range is a big range for where we should top out if this is the setup. And this is looking more like the setup. But we do have this pullback coming in B right now, this B. And I do believe we will test 400 and maybe even fill this gap in B and go from there. And if the triangle's still in play, there won't be a bounce, it'll just collapse. So that's why this is really a hedge opportunity for shorts. Right now is a good opportunity to short the market, especially if we make another high with divergence across multiple time frames, if that happens tomorrow. So that's how I look at the market. The technology sector, a little different. We could still be in this B wave, more than likely we are. And then we finish with C, and then that tops out later. Something like that. This is showing higher highs, but again, it doesn't have to do this. It can still just capitulate lower. So it's a very dangerous. That's why very dangerous, but it's a hedge opportunity. If just to give you an alternative view, but we can easily be done. So it's just tough to say. And here in the Russell, looks like it wants to make one more swing up to like 183, 185, and finish up here. So then Bitcoin started breaking down. So far, it's holding up a support area in a three-wave pullback. You could try to take a long position here and try to play that bounce, but I would stop out at 29,000 if you're going to try that. Gold dipped, but it didn't hit the area I would like to buy it in. It may still go lower. Silver didn't really hit, but could still go lower, and then they could be buys. Nat gas pumped today, like we expected. Could still move up a little bit more in wave 5. Watch that divergence. If it is, then it risks fading again. But it can continue higher. Oil can continue higher to this area and dollar could top out here. Could be 5 waves. Let's see. Yeah, so it's still 3. So this is important for it to hold. If you believe in more upside, if we pull back and break the downtrend line, then it's correct in a bigger cycle. It's correct in this too still, which means the market would still go down. But what it also means is it should fail again and go lower, which should bring the market higher. That's that dip buy. That's that final push higher if that happens. But I did show an alternative that doesn't, where it says dollar is finished. So that's why the market's very dangerous. It's not clear. There's no easy trade right now. It's a very choppy, indecisive market with multiple conflicting messages all over. Although the same message agrees is we have to go lower in the midterm and long term. It's just how we get there is not very clear. Look, Tesla could bounce and crash on earnings, could just crash on earnings. AMD should still go lower. I gave Amazon as a dip play. We could still be in 2. If that's the case, it's still a dip play. Google is the same thing. We're still in this B. B could go lower. Here again, if this is A, right, we're correcting the whole leg. So keep in mind it could still go lower. We could still get this reaction higher. So these are just some hedge opportunities for your short positions. That's what I'm trying to show you guys here, how to hedge short positions. And then Apple, believe, will pull back. And again, this could be another opportunity for a short hedge here. And so anyway, I think that's really it for my update today. I do believe the market could be providing really good opportunities to short it. I think we should see another high. We should see this high break right here. And then we know we're very close to the end. Something like, like that. That's what I'm thinking is going to happen in the next trading day, or probably two, but maybe one day. And then if we get into this area, it's just begging to be, the market's begging to be shorted. It's just unbelievable we got to this point, but there'll be a lot of opportunity as we come down, and I do believe we'll come down into this somewhere in this area. And if the triangle's still valid, and this is again another false breakout, then we'll blow through this and we'll hit 380 before we even realize what happened. All right, so dangerous times in the market. Downside is coming. Get ready.